The biggest loan I've done in my current bank is a $12 million total project cost self-storage place. That was it was a Sears warehouse that they're going to convert to cold storage and then build some more self-storage units. But our bank, probably the total project cost minimum is probably $1 million, where the first lien would be $500,000. And there's some banks that'll do even smaller deals, but and most first lien lenders like us will carry the paper, but it's just not profitable to do, say, like a $500,000 total project cost 504 loan.
So that would maybe make more sense to do it as a 7A if possible.
Absolutely.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
All right. Hello, everybody. This is Beau Eckstein, your host of the Investor Financing Podcast. And today we're going to be talking about the SBA 504 with a SBA 504 lending specialist. We got Carey Hofferber, right? Hofferber. I said it right again.
Great pronunciation again. So,
anyway, I'm really excited to have you here, as I've over the last couple of years started to dive more and more into SBA financing from 7As to 504s. And really, my clients are SBAs are for owner users, owner occupants that are going to be occupying 51% or more of the property. So a lot of my clients are seeking SBA financing because it's the best high leverage financing out there, and the rates are historically low. Plus, the government's probably going to start stimulating these SBA programs even more as we're working our way out of COVID. So I think it's a great time to talk about the 504 and really get a good grasp of what the capabilities of this loan product is. And I'm excited to kind of dive in with some questions. But Carey, if you don't mind, maybe in like a quick background of like you, and I saw on your LinkedIn profile that you were a previous CPA, and then can you talk us through how you got into lending and then how now you are the 504 SBA specialist? Give us a little bit of your background.
Sure. Yeah, Beau, correct. I've been in finance my whole career since college. I did pass the CPA exam back in the 80s. I mean, that was a long time ago. But I've been doing SBA for 14 years now, and with the 504, it's a hybrid of a 50% conventional first and a 40% SBA second. And sometimes that down payment will increase if it's, say, a special use property, like, say, a hotel or a car wash. Then if it's a startup, it would be 20% down. But normally, most loans are 10% down. So it's a 50% first, 40% second, and 10% down. And as you said, the rates are historically low right now. In fact, they were down to like 2.2% back in, I think, October. Now they're 2.7%, but still a great rate. Our rate at our bank is prime plus one, which is 4.25, which is still not a bad rate. And then one advantage we have over most lenders is that we offer a 31-year term where the first year is interest only, then it kicks into a 30-year fully amortized loan that's it resets every 6 years. It's fixed for 6 years, and then it resets every 6 years, prime plus one. So, and as far as CDCs go, our bank has relationships with CDCs all across the nation because we're a nationwide lender. And we prefer to work with the ones that we've done business with before. And the key to that is their speed. I mean, some CDCs are so slow, but the ones we work with are pretty fast. So that's kind of the Cliff Notes version right there.
So kind of diving into this a little bit more, with the 504, it's two pieces. You got a senior piece, which is the bank piece, and then correct. But the banks oftentimes, like your bank, for example, will fund the second piece until their certificate of occupancy, and that's where essentially the CDC comes in and then buys that loan from your bank, essentially, right?
Correct.
Okay.
It depends if a construction deal, it could take maybe 6 months, 9 months, a year. and then we will fund the interim piece of the bridge loan for that period of time. But normally, say it's an acquisition, normally it's only like 60 days until our interim loan is funded by the CDC. But if it's a construction loan, it'll take a lot longer. And that loan is interest only the whole time. In fact, we factor in interest reserve into the total project costs.
Got it. So as we're walking through this deal, this hypothetical deal, we have a construction project of, let's just say it's a self-storage property. And your bank's going to fund the senior loan and the 40% SBA piece.
Correct.
Whereas other SBA lenders might have to get that outsourced, that funding piece. You do it all internally, right? So
correct. And there are some companies out there that do that. I think, you're familiar with Lincoln Capital here in Dallas. Yeah, they do that as well. I mean, I like those guys. We're friends, but they charge a lot of fees. So our bank is much more lenient on the fees as far as the interim piece goes.
correct, and it just makes it easier, right, to just do it all in-house. So
Absolutely.
that's an advantage. And so if the client, if it's like an expansion, meaning they have an existing business and they're expanding their business into another location, and they don't have another SBA loan, that's not a startup. That would be like a business expansion, so they can get up to 90% leverage, hypothetically.
Correct. Mm-hmm.
Which is phenomenal. So if you look at this overall, if you were to just go get a conventional loan for a construction or some kind of bridge construction product, you're looking at like 65 or 70% loan to cost. Whereas SBA 504, you can get super high leverage up to 90%. Now with the SBA piece, which is the second, that's actually a fixed rate product, so it doesn't adjust. And is that amortized over 25 years or 20 years? 25
years.
Okay.
In most cases.
And so right now that rate is somewhere in the mid twos, let's say, for argument's sake.
Okay.
Mid to or 2.75, 2.5, somewhere floating in there. And so that's fixed for the term of the loan, right?
Correct.
So I was talking to a potential borrower before, and I was thinking, like, wouldn't it make sense to basically kind of pay down your senior? I mean, the senior loan is going to have a prepayment penalty on it, but once that prepayment penalty is kind of is coming to an end, you could rapidly pay down the first and just hypothetically keep that 2% money for the term, right? Like you could, instead of having you could keep your senior loan, because your senior loan isn't, you don't have to refinance year 5. It adjusts after year 5, but you could keep it in place for how long usually?
30 years,
Okay.
31 years actually.
So you don't really need to refinance out of these deals. Now, when you said you're prime plus 1, typically, is that going to fix in for the first 5 years, or is that a constant floating rate? Is it a true variable?
No, it's actually 6 years, and then it'll be prime plus 1 that resets for another 6 years. I mean, every first lien lender is different. I mean, a lot of first lien lenders are variable, but we're fixed for 6 years, and then resets another 6 years, and so on until they refinance or sell the place or.
So that's like another huge advantage. I would much rather be locking in a fixed deal right now than hedging that the rates are not going to go up, because I think at some point here in the next year.
No kidding.
Right. So are there right now SBA? I mean, I remember a few months back, SBA had this forgiveness program where they would forgive the first 6 months of payment or defer the first 6 months payment. Was that both on the 7A and the 504? I know it's
correct.
You down. Is there any other incentives in the pipeline that they're talking about to stimulate the economy due to COVID that you know of?
We're still waiting on the guidelines, but they're going to relax the refinance guidelines. For example, the debt had to be seasoned for 2 years. Now it's down to 6 months. And so that's great. So, I mean, if somebody has a short-term loan, Plus, you can they're going to allow you can refinance a 7A or a 504 to a better rate. Yeah, I mean, say somebody has a 7A that's prime plus 2.75, they'll be able to. They can refinance into a 504 at the blended rate of 3.5 or something like that.
So as long as that debt is seasoned for 6 months, they potentially could do almost like a streamlined refinance.
Yes.
So me as kind of the middleman, let's say, commercial mortgage advisor, mortgage broker, I could go and find people that are, paying a higher rate and basically offer them a streamlined program. Is the timing shorter to do these streamlines?
The SBA is backed up right now. I mean, where it used to take maybe 2 or 3 days to get an approval from SBA, now it's taking like 3 weeks. But still, it's if somebody can get to a 3.5 blended rate, it's fantastic from a 2.75 over prime. So it's fantastic.
So yeah, no, but in general, the process would be shorter for them from when they originally did their first loan, because I mean, essentially you're just refinancing the existing debt that's already been in SBA. So do you have to put together a full package, I guess is the point, or is it a little bit more of a condensed package?
Well, you always need an updated personal financial statement and tax returns and everything. So we would have to get a complete package.
Let's kind of walk through the process, as we're looking at sizing up deals. If there's any, potential people out there looking to, build a property or acquire a commercial building as an owner user. Let's walk them through like the basics that what we would need to size up the deal. Let's talk about Form 413, debt schedule. Can you just walk them through what you want initially to kind of say, okay, yes, this looks like a deal we could do. Here's the laundry list of things we need.
Well, the best thing is an executive summary to kind of describe the deal. So, I mean, that's the first thing I ask for is a summary. And then if that looks good, then send a short checklist out of tax returns, resume, personal financial 413. And then I do a write-up. It takes me about a day to do a write-up, and then I submit that to management. And normally within 1 day, I'll get an answer back, and then right into underwriting. And our underwriting turnaround time right now is pretty good. It's like 5 days, which is pretty good. And then we send a commitment letter out, and then once they sign that and pay the deposits for the third-party closing costs, it goes right into closing.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
Let's talk about SBA, kind of like the standard SBA fees on a 504. Can you talk about the guarantee fee and what other fees are associated with SBA financing? I mean,
and by the way, some of those fees will be waived with the new stimulus package. As a bank, we have to pay like 0.5% of the interim loan to the CDC. That's going to be waived, and then the CDC charges like 1.5% for kind of like an underwriting fee. That will be waived also. But the CDC, their full fees are normally like 2.4% or something like that, so it's not bad. And those can be financed, by the way. Those can be wrapped into the loan, as well as our fees with the bank.
So typically on the 504 piece, there's about, I mean, just as far as lender fees, there's about 2.4% guarantee fee.
Well, that's I mean, they have like 4 different levels of fees, but that's a total 2.4%.
Okay, and then obviously it's they're going to get a term sheet, once it goes through the process with the fees spelled out for the senior loan and the second SBA.
Exactly.
So it's a little bit, the costs are a little bit higher than a conventional loan, but you're getting 15 or 20% higher leverage at better rates typically. So that's why
Correct.
it's going SBA right now. And it's, I mean, like we talked before, rates right now are historically low for SBA in general, right? So it's a huge time. So I see like with what's happening with COVID that there's going to be a new emergence of people starting businesses or expanding their businesses because there's going to be some discounts on some commercial real estate soon, with some people having to exit out of the business because their businesses are obsolete versus these new businesses that are able.
Which is unfortunate. My heart goes out to those people. It's unfortunate.
Yeah. I mean, we're in a crazy time where there's, but also too, there's, unfortunately, it's hurting tons of people, but there's always opportunity for people, during these times to take advantage of the programs that the government puts out there in the banks, right, to stimulate the economy. And so that's what's going to need to happen in order to relieve some of the downward pressure from some of these businesses closing and things. So I think SBA plays such an important role in the economy in general, right? So they can.
Correct.
They're obviously doing things right now to get people to expand and grow their businesses, and which is great. And they're, obviously helping people with PPP and so forth. That's another question I get oftentimes, because a lot of these business owners have taken PPP and EDIL. Is SBA going to look harshly upon that for new loan requests? As long as, I'm assuming they got a debt ratio for these, but is there going to be a problem for borrowers that have taken SBA PPPs and things like that?
Well, normally the PPP loans will be forgiven, so we don't even factor that into the debt ratio. And normally the idle loans are pretty small, so they really have no impact.
So it's not a turnoff for SBA to say, okay, you were hurting financially, you took, and we're not going to do your deal. Okay, great. So that's good, because I get that question a lot. Because I think.
Well, by the way, the reason that the SBA is backed up right now is because a lot of banks have just delayed or even gotten rid of their conventional financing. So that's why all these conventional folks are coming over to 504. That's why the SBA is so backed up right now.
So going back to, so when we're sizing these loan requests, let's say I have a client, a sponsor that comes to me, and if they're buying real estate, it's an owner-occupied type business. I think my job as a commercial mortgage advisor is to figure out, okay, where can I bring this deal to? What bank makes the most sense? And then, there's differences between actually preferred SBA lenders that are actually banks, and there's some alternatives that are not banks. But each bank seems to be really good at a certain piece of the SBA. Like, for example, your bank likes to do 504. That's your specialty. You like to do commercial real estate type SBA deals versus the equipment and things like that. Whereas if it's an equipment SBA 7A or 504 deal, there might be a better bank. So will you kind of just outline exactly like your footprint? Or I know you're nationwide, but can you outline your appetite for SBA 504 deals?
Yes, as I mentioned before, we love self-storage, light industrial. Our chief credit officer, he's old school, and he doesn't like hotels, gas stations, because they're risky properties. But anything that's owner occupied, like rent replacement, we'll take a look at, except for the business types that he doesn't like. So, you are 100% correct. Every bank has their little niches that of the properties that they like, and every first lien lender is different.
So typically, like, the way I look at it is that I'm pretty good at getting new prospect clients. They come to me, and my job is to build relationships with guys like you, Carey, and others. And so Carey, over the last week or so has been a very big asset to me, because if he can't do it, he says, Beau, you should try this, or you should meet this person, because that's what I like about your network in the SBA world, is that people are very open to say, hey, we can't do it, but try Jim over at this bank. And so that really helps me as an originator, because at the end of the day, my job is to connect prospective borrowers to the right bank. And that's why we ultimately will get some kind of paycheck by doing this, because there's not a one size fits all for any commercial loan request. And you can't.
Correct.
Yeah. And so let's kind of talk about deal structuring a little bit more, as far as, what is the capability of, let's say your bank, like deal size, like for example, 504, the SBA piece can only be 5 million. But does that mean your senior piece, could you do a $20 million senior piece, or is there some kind of cap where you say, for an SBA 504 deal, the max proceeds could be X?
There is no limit on the first lien. It all depends on how comfortable the bank is. So, I mean, you're right. It could be 20 million, but it just depends on the risk. So, I mean, the first lien can be as high as you want it to be.
Okay, so have you done anything over 20 million in SBA yourself, collectively?
The biggest loan I've done in my current bank is a $12 million total project cost self-storage place. That was it was a Sears warehouse that they're going to convert to cold storage, and then build some more self-storage units. But there's also 504 has a green. It's called a green program, and you can actually do 5.5 million on the first lien. I'm sorry, on the SBA second. Then you can do 3 projects beyond that. So I mean, if you put solar panels in, I mean, technically you can do up to like 40 million with 3 projects.
That's great. And so your bank will look at, what is your bank kind of threshold, like a $20 million loan collectively?
I would say, Beau, our max is probably 15 million total project costs.
Okay. So anywhere from SBA 504 makes sense. I mean, what's the smallest deal that would make sense from like a financial? I mean, are banks willing to do like $800,000 collective deals, or is it more they're looking for bigger?
Our bank, probably the total project cost minimum is probably $1 million, where the first lien would be 500,000. And there's some banks that'll do even smaller deals, but and most first lien lenders like us will carry the paper, but it's just not profitable to do, say, like a $500,000 total project cost 504 loan.
So that would maybe make more sense to do it as a 7A if possible.
Absolutely.
So yeah, let's kind of talk about the difference between why somebody would go 7A versus 504, if you don't mind.
Of course. 504 is more of a long-term investment, because there's a 10-year prepay on the CDC side, plus our bank is a 10-year prepay. And 7A is obviously the flagship loan program of SBA. And I mean, they can go down as low as 50,000. So, I mean, the differences, of course, I'm pro 504 because that's what I do. But the 7A is just, sometimes the rate is variable. Our rate is fixed for 5 years on the 7A, but that's kind of the main differences.
Yeah. So I mean, you can do real estate with the 7A, but probably from a total like cost of funds, the 504 is a better deal for long term. It's because I think it clearly has a much more competitive cost of capital.
It does, and once you go with the 7A, you can do franchises, you can do business acquisitions where there's no real estate. I mean, some lenders will go up to like $2 million if the deal cash flows and everything. But of course, you can't do that with a 504 because 504 is pretty much equipment and real estate.
And you've always strictly done 504s. Have you ever originated 7As yourself?
Well, when I first got in the business or SBA business, I did a lot of 7As, but now 504. This year's gonna be great for this year's gonna be fantastic with the stimulus advantages and everything. This year's gonna be great. I mean, we are so busy right now.
As far as qualifications go, so anybody, if I'm correct on this, anybody that has a 20% interest in the entity that's buying or building the property, they need to be on the application essentially.
That is correct.
But let's say I was the borrower and I was building an assisted living facility, for example.
Okay.
And I was 80% of the group, and then I had two kind of like passive sponsors in the deal that put up capital. Is that acceptable from an underwriting standpoint, as long as the true intent is owner occupied? And
it is.
Okay.
It is.
So I could essentially bring in equity partners as long as their interest is under 20%. They don't need to guarantee it.
That is correct. We might ask for a personal financial statement and maybe a resume, but that would be it. Of course, once again, every bank is different, but we would probably want to do some kind of background check on those minority borrowers who are investors.
Have you guys, has your bank been doing any ground up assisted living or assisted living acquisitions?
We used to do a lot of assisted living, but now it's getting so saturated. I mean, all these hotels that have gone bad are converting to assisted living facilities, and the market's getting saturated. I'm kind of an old guy, and I subscribe to ARP, and I read this article about assisted living facilities. Oh, it's just terrible. All the COVID stuff going on and everything. So right now, our bank has suspended ALFs, unfortunately.
Okay.
So I get a lot of requests for ALFs. I mean, a lot, probably 2 a week. So
yeah, I'm working on a few. Now, can you talk to can you talk about maybe a couple deals you've done or you're working on? You don't have to give specifics, just kind of like the way it was structured, kind of things that might help somebody listening on like how deals are getting done and how people are structuring these deals.
Well, as long as the deal cash flows, have strong borrowers, we'll take a look at it. Of course, except for the business types that we don't like, hotels and everything. But I do a lot of rent replacement deals. Like, for example, I'm doing a deal right now. It's a doctor. They're leasing their office, and they found a nice building, and they decided to buy it. And so we do a lot of deals like that. We call them rent replacement deals.
How as a for myself, like when I'm speaking to clients that are maybe in a similar situation, they own their own business, a doctor, dentist, and they're renting. You know, what have you seen that works? I mean, obviously it's kind of cut and dry where they can start depreciating the asset, maybe doing some cost segregation as the owner of the property. I mean, is that kind of why these owner users or like these doctors and things want to buy the building? There's appreciation, obviously, but maybe it's more for a tax write-off for them.
Well, in a lot of cases, the actual payment on the mortgage is lower than what they're paying for rent, so it makes sense for them to buy a place.
Yeah, no, I'm just asking these questions because I know somebody's listening and they're probably in a similar situation where they're renting, right? And like, you know, with cost of capital so inexpensive and the ability to get higher leverage, like up to 90%. I mean, I think now is the time more than ever that people are going to start buying these assets, right? Is that kind of like what your bank feels that's going to happen this year with the stimulus and everything?
Absolutely. And with all the incentives that with this new stimulus package, I mean, I cannot stress enough the relaxing of the refinance rules. It's just going to be great. I mean, we're still waiting for the guidelines, but it'll be fantastic.
Yeah, no, this is good. It's actually just giving me a lot of nuggets of like all the opportunity that's out there and like the advantages of buying. And so let's kind of like we'll wrap this up here shortly, but let's kind of like wind this back. So let's just say there's this doctor, your hypothetical doctor that's been renting and now they're ready to buy because they see the advantages of buying. So the bank, for underwriting is going to want to see 3 years of their tax returns, essentially business and personal tax returns. And they're going to look for cash flow. And then they're going to basically underwrite the cash flow and look what the debt service coverage ratio is going to be based on their cash flow.
Correct.
So that's really how an SBA deal really gets done from an existing business owner, right? Now,
there's an old saying in the SBA, cash flow is king. So cash flow is by far the most important. And
how are we going to look at the more of the startup SBA 504 deals? I mean, where they don't have the 3 years tax, they have their personal tax returns that are maybe strong. What if it's a doctor that was an employee and now they're starting their own practice, they want to buy a building? I mean, is there ways of getting these deals done? I noticed when it's a startup that you got to put down 20%, but can you talk about that a little bit?
Sure. There's some lenders out there, which I have a lot of friends in the business and everything, that they'll go projection based. But with a doctor, our bank would take a serious look at that and see how strong this person is. But say it's a startup retail store, we probably wouldn't look at that. But there's some lenders out there that'll do projection based deals. But there's some lenders out there that'll do projection based deals. You know, if they hire somebody to maybe do a feasibility study or a good business plan and do good projections, then they can get financed.
So yeah, so when it really comes down to prepare for, like, if you're doing a projection-based business, like really it comes down to really kind of getting your because people reach out and they want to get SBA financing to me all the time, but it's like, well, where's your business plan? Where's your sources and uses? So it's almost like we have to coach these people how to get this deal done.
Exactly right.
What are some tools that you recommend? Like these kind of, I guess they haven't gone through the process. Like, you know, can you kind of walk them through like what would be needed from a projection based or more of a startup type business to make the deal? You know, you need the executive summary. You need a sources and use. Can you kind of walk us through that process a little bit?
There's actually a website that offers business plans, and you can go on there and for almost every business type. And I can't remember I mean, if you go to Google, type in business plans.
It's called SCORE. It's a nonprofit actually, and they help you draft business plans.
That's it, but the one I'm thinking of is a different one.
Okay.
But you're right. But
well, message me when you think of it.
But no, I've got it on my computer that has no sound, so okay. I will send you that link. So
yeah, because you're going to send me a PowerPoint too. But yeah, no, I think we touched on a lot of things. I know you're super busy too, because this is an opportunity, so I appreciate it. So yeah,
thank you.
This was really good. I'd love to do some more follow-ups in the future, and maybe we could kind of show like a mock case study of a sample deal with slides and.
Sure. I mean, I can show you a write-up that our underwriters do. You know, that I mean, like you said, it has sources and uses. It's like a 20-page document. That's what underwriting does before it goes to approval. So,
yeah, no, this is really good. This is a really good. I mean, there's a lot of SBA banks out there, but obviously your group's a preferred SBA provider and one of the biggest out there doing 504s. You know, it seems that a lot of the banks love this product because their risk levels is kind of curtailed because of the guarantee from SBA.
No question. 50% leverage. I mean, 50%. I mean, and then think of a $2 million deal. I mean, the bank's only on the hook for $1 million of that. So that's why our bank loves 504 deals, and we portfolio everything. Every 504 loan we have, it's on the books.
Yeah, that's another advantage, because some of these other lenders, they securitize them and sell them off. And
yes, there is a product, a secondary market product for 504s, but we carry our own paper. So,
and last question. So the CDC. Their funding is actually, it's SBA money that comes to the CDC that actually buys it. I still am a little unclear on that part.
It does come from the SBA.
Okay.
Unlike a 7A. 7A is the bank's money that they probably sell in secondary market like most 7A lenders do. But the SBA does fund the CDCs.
So are CDCs, are they for profit or nonprofit?
A lot of CDCs have a .com website, so they're for profit.
Okay. So yeah, and basically kind of let everybody know, CDC it's a community, what's the acronym for CDC?
Certified Development Company.
Certified Development Company. And they're out there really to be they're basically like the partner of SBA, right? So how do you explain a CDC in a kind of a layman's terms?
A CDC is a government-backed entity that helps businesses employ more people, and I think the best definition of that, Beau, is probably on the SBA website. In fact, go to my website, my504.com, and I have a great explanation of a CDC.
All right, perfect. Well, thank you so much, Carey. Thanks for watching this episode, everyone. I'm going to stop the recording now, and I hope you enjoy this. We're going to bring you more and more value and educate everybody on the different loan products out there, and how you can get high leverage and low cost of funds to grow your net worth and your business. Thanks a lot.
Thank you, Beau. Appreciate it.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.